Folks, last week really didn't lack for headlines or explosive stuff, and I mean that literally. Peace talks in the Middle East were called off. The US is now blocking the Strait of Hormuz, and oil prices are going on a wild ride. And despite all that back and forth, markets are staying pretty steady to even strong. And with Bitcoin, we saw it jump again early this week. Whether that's the first sign of a short-term market hype and how you can benefit from it, I'll talk about that over the next few minutes with Oliver Michel from Tokentus. Great to have you here.
Hey.
So Easter's over, and the news has basically kept hitting us non-stop, especially out of the Middle East. Like I just said, a lot's happening. It still doesn't look like peace is close, but of course we're hoping talks continue. That's one topic. The other one is the Clarity Act, where things should start moving again. We'll get into that. Those are the kinds of stories that really shake up the crypto crowd right now, hopefully in a good way. Anything changing at the moment that's getting people hyped?
Yeah, Johanna, you're totally right. Those are the two big topics that really move crypto for us. The US-Iran conflict is kind of fading into the background a bit, and people are getting back to normal, Hasik. But what's coming onto the table now is the Clarity Act. Senators are back from the Easter break, and they've got to hit the gas because they've only got 3 months. If they don't pull it off in those 3 months, it's not happening this year. But besides those two big topics, there's one more thing that's really caught my eye, and that's the US indexes, because technically they're sitting at some pretty key levels. So the big question is, can this trend keep going or not? Kind of make or break? We're going to dig into that in detail today.
First thing we'll look at before we dive into the US indexes is the Fed Watch tool. Last week we got some economic headlines that weren't exactly great, especially the GDP numbers. We already posted about on the channel they got revised down again from the first and second releases. But even with that, the Fed's still sticking to its rate path for now. Or are we finally seeing any signs of rate cuts?
Yeah, like you said, it's not getting any better. Unfortunately, everything's still heading in that negative direction we've been calling out for months. Last week, we got the third reading on US GDP for Q4. Q3 was still 4.4%. Then the first print dropped to 1.4%. The second walked it back to just 0.7%. And now the third says it's really only 0.5%. So yeah, the economy is slowing down, and tied to that are the labor market numbers we saw last week, and those weren't exactly pretty either. And that's one side of the scale, the economy and the job market, and the other side is inflation, and there too you can see nothing surprising. Inflation's been picking up lately, not least because of the tariff situation and of course high oil prices. And here you can see core PCE. We're still nowhere near the targeted 2%, previously 3.1, expected 3.0, and it came in at 3.0, and that's excluding food and energy. And then Friday we got CPI. Same picture. Previous 2.4, expected 3.4. That's almost a full point up, and it came in at 3.3. So we've got a slowing economy and rising inflation. So yeah, what can you do? Best thing is basically nothing. And you can see that here in the end. The market's also saying nothing's going to happen. And you see that in the Fed Watch tool, whether by the end of the day, the Fed says, okay, it's a choice between the economy and jobs on one side and inflation on the other. And after months of trying to rein inflation in by holding rates where they are, maybe they end up in the camp that says we need to support jobs, we need to support the economy, and in the end, we'll have to cut rates. After all, we'll see, but that call isn't really ours to make. All we can do is judge and analyze it after the fact.
And of course, there's still a lot coming up this week. This Thursday, we're expecting March PPI inflation data, and we're also getting close to the deadline on the ceasefire between Iran and the US and Israel. So we're watching that. Even if markets seem to have gotten a bit used to the war backdrop, still, that date is on everyone's radar, and there's still hope for more talks. The Clarity Act and the other issue are the two big things on the table right now. And we've just had, well, not really Easter break, but at least here in Washington, it felt like not much was moving. This week, the senators are heading back to DC, and we'll probably keep talking, negotiating, and hopefully push the Clarity Act forward a bit. Like you said, once those 3 months are up, it's basically game over and it'll be too late.
Ist zu spät.
Midterms in November. Then it's campaign season and the year is basically done, and then you're waiting until 2027. So they've got to find a consensus in the next 2 or 3 weeks, then it has to go to a vote, and then it can work. And Coinbase is back on board now. Yeah. Without much explanation. So it was probably like they leaned on them a bit. Agree already so we can move this forward.
If Coinbase is back on board, there shouldn't really be any more holdouts, right?
It should go through.
In the meantime, let's look at the US indexes, which of course reacted too. Over the past few weeks, we've been taking a closer look at the Nasdaq and Russell charts, and you already said technically it's getting interesting now in terms of targets. Where are we?
Yeah, totally, Johanna. Now it really gets interesting, and now it really gets crucial. You know the drill? This is the Nasdaq on the daily chart. It came from way down low, climbed for a long bull run, then topped out here and got the correction we expected, made worse by the US-Iran conflict kicking off. We followed the drop and pegged the 22,000 to 23,000 area as a potential support zone. And right there, basically dead center, the Nasdaq stopped. Meaning, the key support is around 22.2, which we'd pointed out before based on the highs from Feb 18 and 25. I'd say, looking at this move, it's a good reminder, but right now it's not in play. So we focus on this high and this low, and then we do what we've been doing forever, drawing our diagonals. Up here is where it starts. That's the one. That's the 0. And from there we pull the retracements. That gives you the key levels, 618, 702, and 786. Real quick, when it drops and then bounces and you're at 618, you've retraced 61.8% of the move from the low back to the prior high. And statistically, in this zone between 618 and 786, the odds are still pretty high. It rolls over again. If it breaks through, you can assume it keeps pushing higher and the uptrend continues. So as of yesterday, we're right in the middle of the retracements, and even with the bad news, it was a really strong day. You can see it in that green candle. Right now, we're sitting in the key 3 levels, 618, 702, and 786. So the question is, does the Nasdaq have enough juice to break through and keep the trend going? If it does, it should head into the 27,000 to 28,000 area. In case she can't make it through here, she'll roll over, and then of course we've got the beginning of the end, the rollover. Personally, I'm assuming the momentum we've seen building here will keep going. Definitely not straight up. There'll be some pullbacks, but I think we'll punch through the 3 key retracements you see here and keep that uptrend from below going all the way up to the final all-time high.
So the next hurdle is the 786, right?
Exactly. It has to push through that, and then we're on a good path. And you can see this is the key moment. Down, up, stuck in this zone, so does it keep going or roll over? Those are the three retracements, that's why they're called that.
Let's take a closer look at the Russell again. You can see a clear up move here too. Almost 1-to-1 like the NASDAQ. What matters now? We're already through the 786 here.
Yeah, that's how it'll play out in the end, Johanna. The four big indexes will mostly move in sync and spread over a few days, hit their all-time highs before they roll over. And you can see it here on the Russell, which we've been watching for weeks now, along with the NASDAQ. We keep getting these three pushes. Push one, push two, and this is the third push. And between the three pushes, you always get those corrections. So 1, 2, 3, 4, 5, 3 up, 2 down. That's how you get 5. And here you can see the Russell, similar. To the NASDAQ, I marked the 1 and the 0 off the last all-time high down to this low. And you can see how the Russell, with this huge move, and it really has been a great move here and here, has worked through the retracements too. Sure, it's poked up through the 786, but it's really just a little peak above. We need a bit more to say, yeah, it's truly broken it, and we'll keep the trend going higher. But the odds are still really, really high. Like with the NASDAQ, that it won't just tag the retracements, it'll push up through them, then head toward 2,800, 2,900, and best case even 3,000 points, printing that final all-time high along with the NASDAQ.
To round it out, today we'll also take a closer look at the Dow Jones and the S&P 500 on the daily chart. Same kind of setup here?
Exactly, Johannes. I mean, if we're saying the NASDAQ and the Russell are moving in sync, then the Dow and the S&P should be too. That's kind of the proof. And if you look here, this is the Dow high. Here's that key support we marked early enough, and it basically nailed it right on the 1.0. And here are the three retracements. You can see the biggest of the three indices, not the broadest, but the biggest, is basically sitting on the 0.618 and now pushing up into those retracement levels. And on the S&P, you see a similar picture to the Russell. Same thing here. The 1.0, and we've already pushed pretty cleanly through the 0.786. The S&P set the pace to the upside for a long time, and this move is still pretty strong. So, to sum it up for the big US indices, like I said up front, the decision is happening right at these retracements now. If we run through those retracements and break out to the upside, then we'll see fresh all-time highs, just like we laid out in our roadmap in that first block. When I say final all-time high, it's clear. We'll end up somewhere up here and then the rollover happens. So we'll still get that last burst higher, but at some point, like they say, the road runs out. And then we'll see the rollover. Because this can't go on forever, especially with this huge debt load. The inflation risk, unemployment, and consumers under real pressure. The stats show it, but we don't need to get into it here. Bottom line, Johanna, that's where the big US indices stand, and if they break upward and head toward those final all-time highs, that'll obviously affect our crypto. Hopefully it drags crypto up with it to higher levels. I'm not talking all-time highs yet, but we should definitely see higher levels.
Bitcoin's still got a little catching up to do. If you're cautiously talking about higher levels, you're obviously hoping it'll push back above 126,000 or at least tag it again. Let's go through Bitcoin step by step on the daily chart. Recently, we saw that the last sideways range broke to the downside after 69 days. With the current sideways stretch, we're basically at the end of this cycle. The only question is up or down.
Yeah, Johanna, that's exactly the key question. Up or down?
But how likely is it really? that you can infer that just from the timeline, 69 days, sure, you can't just lay that over it one-to-one like some blueprint.
Exactly. So here are the 69 days you mentioned. This move down here, and basically the first red day, that's 69 days. If you take that and mark off 69 days, then the first really big red day would be this coming Thursday, more or less. If you look at that 69-day span, you get a feel for the size of this sideways phase. Now we know that one was kind of a bear flag that broke down. And the question now is here, is this another bear flag? Or is this basically the bottom that got built with the move up? So as of today, April 14th, we're still ranging. We've got 67 days behind us, and we're at least forming a bottom. That's the hope, really. And we've obviously got possible paths to the downside, no question. If that's a bear flag, it can break down from there. We've said over and over that 60,000 could get tested, but it could also dip into the upper 50,000s. That's possible. If you measure out the right move here, you end up in those zones. So yeah, we got a question on our channel how likely it is that we go lower. And I answered 60-40, 60% up, 40% down. But given what we just said about the US indices, Joanne, that they're right before breaking through that retracement. If crypto can sync up with the US indices and their move, then the odds of going up are a bit higher. Meaning the bottom's been set. And with the push from the US indices and the liquidity flowing into the markets, we start heading higher. And what that move up could look like, we've honestly chewed through that enough by now. Calling this a relief rally is way over the top. We're moving sideways, slightly up, but we were slightly up here too. Same thing here. So in my view, nothing's decided yet. And there are plenty of people saying it's going down. But there are also plenty saying it's going up. So it's almost a stalemate. And we'll see how it shakes out over the next few days. The routes to the upside are pretty clear. We've got the CMG gaps that need to get filled, plus the SMAs, 50 and 100. And then, of course, we've got the three key retracement levels again. If it can't push through there, it can definitely get rejected again at the latest right there. And if it takes that route, you could totally call it a relief rally that gets turned away around 110, 111, 112. If it breaks through here, then we've got trend continuation. And then what I've been saying happens, we get a mid-cycle correction. So not a bear market, but a mid-cycle correction that then runs higher on a continuation rally to 140 to 150,000 US dollars. But that's all future talk. Really. Now we just have to see how the decision shakes out here over the next few days, especially together with the US indices. But the way Bitcoin is holding up here, pretty robust in this market. You can see it here. That's the vertical line. That's where the US-Iran conflict started. And Bitcoin is basically moving sideways almost unaffected. And I can totally imagine we really do have this bottoming process here. And in the end, that's also backed up by the indices, which we're about to look at in a second.
With Bitcoin, we'll obviously also look at the weekly chart. If you're thinking positive, that's 3 green weeks, assuming this week actually stays green for Bitcoin. So what is the strength right now measured by the RSI telling us?
On Bitcoin, on the weekly chart, we always keep an eye on the relative strength index. And we look at it on 3 different levels. Long term, like we said, those lows mean you can definitely talk about a bottom forming. Then there's the medium term, bearish divergence. RSI down, price up. That'll eventually snap and roll over. But what matters to us short term over the next 1, 2, 3 months is, where do we go from here? That sideways move on the daily chart, does it break up or does it break down? We'll see that play out. And if you look at the RSI, like we said, we've got a divergence here. Price is down, RSI is down. And if we want price to move up, the RSI has to move up too. We drew this trend line, and you can clearly see the breakout we've basically been expecting for weeks. It's getting more obvious, which raises the odds we'll get a rally that lifts the whole thing. And then we can say, in the end, that was the bottom right there. You always end up asking, where's the power coming from? Where's the drive for this? Move up. What's going to kick it off? And we keep summing this up because nothing's changed. A lot is coming together. The US government wraps up the conflict. A stimulus package is also getting passed, especially with the midterms coming up, that they want to win. The Fed is now pumping a ton of liquidity into the market. Maybe they'll also do something on rates. We saw yesterday the US indexes still jump hard. And by jump hard, I mean they don't just drift up, the stocks behind it are getting bought. So liquidity is flowing in, and not just into equities, but into crypto too, like we saw yesterday with Bitcoin up around 5 to 6%. And we've also seen gold and silver soften a tiny bit. Though that's almost an exaggeration since they're basically moving sideways at a high level. Still, money's flowing out there, and that can come in here. And of course, the Clarity Act is on the table, and it's hugely, hugely important. I can only keep saying it. It'd be a shame if it didn't pass, because then we'd lose a lot of momentum. We could basically write off. And yeah, that would probably mean it wouldn't move up quite as well. But bottom line, Johanna, this little dip down here is the key. It's a positive one, and it brings real strength into Bitcoin's weekly chart, and that strength is what's going to push it higher. That doesn't mean we can't see another small move down, but the trend overall, as a trend following indicator, that's totally positive.
On the monthly chart, you can actually take away something positive too. We've got the MACD on the monthly view, and what you can see is it's at least moved from deep red, dark red, into a light pink, which, looking back at Bitcoin's history, is actually a positive signal and could mean more upside. How do you read that?
Yeah, I've been pushing back against this red line here for months.
No.
The monthly MACD flipping into the red, which more or less means the bear market is confirmed. We're in a bear market. That was the case here, that was the case here, and you probably have to say it's the case here too, even though I still think it's a mid-cycle correction. But we'll see how it shakes out. We've got the gray line, that's the cycle high we had here as well. And now we've added this green line, which signals exactly when it shifts from dark red to light red. And that means you can say we're seeing a bottom form. That doesn't mean there can't be one more small dip lower, but the bottoming is there. With a bit of patience, it starts to show, and that's exactly what we got last night. When I checked yesterday afternoon, it was still dark red, but this morning, at 7:21, when I finished the chart, it was light red, and that's actually a really good sign. So while in the past I didn't like pulling up the Bitcoin monthly chart because of that line, I'm now really happy to bring it up because of this green line, and we're going to track it now, because the moment, if April keeps going like this and we're up 9% right now, then chances are the next histogram candle will be light red too, smaller than the current one, and then we move up from there, like you see here. And all that with this in the background, Strategy keeps buying, dropped $1 billion last week to buy Bitcoin. Last week for spot Bitcoin ETFs was insanely good, 800 million in inflows. And someone changed his tune. Jamie Dimon from JP Morgan said in a Fox interview on 4/8, blockchain is real and makes processes and payment systems faster, cheaper, and more effective, and we use it at JP Morgan. So the guy who just a few years ago said if one of my sales guys sells Bitcoin,
then he's fired.
then he's out because it's a scam and it's all garbage. And even in that hearing, I'm blanking on the name again, with John Deaton's big opponent.
You don't mean Gary Gensler, right?
The one who also played Gary Gensler?
Warren?
Elizabeth Warren? Yeah, exactly. He was basically telling her what she wanted to hear, saying if he were in charge, he'd definitely ban stuff like Bitcoin and crypto and blockchain. And now he's on Fox saying it's the best thing ever that they're using it now. So, the biggest bank, with him at the top, is now in line with Larry Fink. And the biggest asset manager backing it. That's definitely positive news, probably not an instant price mover, but longer term it matters. And last thing, like I said last week, 4:15. So tomorrow is tax day in the US. Tax returns have to be filed, taxes have to be paid. Some folks might have to sell something. It didn't really look like that with Bitcoin yesterday, with that price pop, but I'll just throw it out there.
Selling something means doing it so you can cover your taxes.
Exactly. If you made profits and you owe taxes on them, that cash has to come from somewhere. Either you've got it, or you have to sell something you hold in equities, stocks, or coins to pay those taxes. That's why people say some folks have to sell to pay for their gains, and that creates a bit of selling pressure that used to matter more in the past because, like we saw last week, most of the coins were held by retail investors. By now, it's shifted a bit toward institutions who are getting into this market more and more and kind of taking it over.
You already mentioned it. Bitcoin did really well yesterday. We also saw this morning we're clearly above 74,000. A moment ago, I think it was $74,500. It wasn't quite as impressive for some altcoins though. How are Ethereum and XRP looking right now?
Yeah, quick look back at the Bitcoin daily chart, 75.6. That would be the last little high in this sideways move. If Bitcoin can push through, then it should go for 80, go for 90, and if it runs into that 61.8 retracement area, we can pretty much say it's in a relief rally. Otherwise, you still have to stay cautious. Yeah, it's kind of a shaky situation. The two big altcoins are basically doing what Bitcoin's doing. IS, even more so than XRP. You can see that super clearly here. IS on the weekly chart, you can see that. The weekly RSI has a similar setup as this here. So here too, the move up is kind of mapped out. And what we didn't see on Bitcoin's weekly chart is the MACD, and you can see it here. That's the first green candle in the MACD histogram. That's pretty great. If you plotted Bitcoin with the MACD, you'd see that too. So yeah, we're getting a turn here, meaning strength is picking up. And that means there's a really good chance we're moving back up, and we've seen the bottom, not just on IS, but also on Bitcoin. By extension, XRP is a bit weaker here, but that's always been the case. Here you can see that, unlike over here, this area isn't really forming at all yet. And if it is, it's only very tentatively. And the weekly MACD still hasn't flipped into the green. You can see that while you've got that quick move here, over here basically nothing's happening yet. Don't let that discourage you. XRP has always been like that. It goes sideways for a long time, then dips again, and then it shoots up. So yeah, those two are getting pulled along. The RSI is at least confirmed on IS, MACD. The weekly switch has happened. IS is in this phase stronger than XRP. Got to say that clearly. When things move up, IS puts in a pretty solid performance, unlike XRP, which mostly just goes sideways. But overall, we still have the same chain we've got in our roadmap. What are the US indexes doing? Are they going to break out? What's Bitcoin doing? Is it going up? Are we getting a relief rally? Then the others will follow. And since these coins have way smaller market caps, the liquidity coming in moves them a lot more, so you'll see much bigger performance here. And I said, if Bitcoin goes into a relief rally, then we'll definitely, or at least very likely, see the old highs again. Yeah, so that means the highs. That's my base case. If Bitcoin pushes past the retracements, like above 111K, then I can totally see us moving higher here too. And, per our roadmap, hitting the target zones we laid out. So, XRP at 7, 8, 9 bucks is possible, and we've got the same thing here with eyes, too.
What was the target for Ethereum, if it goes really well?
7, 8, 9,000 bucks. But only if Bitcoin moves into a continuation rally, prints a new all-time high, and we really get into that final hype phase driven by the big US indexes. And man, you can see on days like yesterday, it was actually pretty wild to watch how, despite all the bad news, the Strait of Hormuz gets blocked on both sides. Maybe they still won't come to an agreement, and there's more going on too. It's not just the US-Iran conflict, there are other problems. Even so, the market keeps getting pumped with capital. And you can see it, and our coins are definitely going to benefit from that.
You just said it, Bitcoin has to lead the way so the altcoins have the path cleared and can follow. So until Bitcoin keeps pushing down this road, nothing's really changed with Bitcoin dominance as far as a rollover or a possible rollover into altcoin strength. That's why we're not covering it this week, and we don't have the roadmap either. There just hasn't been a whole lot of change, so we left it out, but we talked about it in the interview. You said a few times that right now we're at a really crucial point where it's basically up or down. You could say that a lot, sure, but why are you so convinced it's especially important right now that we get a decision, up or down?
Yeah. I probably wouldn't use the word turning point because we're at a critical spot. And based on what we've laid out, it can go up or it can go down. We, or really I, got some heat during the move up to Bitcoin's all-time high last October, up at 126. And when it rolled over and then turned into a bear market, people said I didn't point to the bearish signal strongly enough. If some people see it that way, fine, but I don't. And I want to be really clear again here. In this interview now. So we've laid out both scenarios. The US indices are sitting in the retracement zone. Retracement means it can pull back. That's the key. If they break those retracement levels, the trend keeps going. If they can't, you get a rollover. I already said we're in the retracement zone. What could happen from here? Everyone can figure out. Bitcoin's been moving sideways. 68 days, 69 days. Now it's decision time. Does it pop into a relief rally, up into the retracement zone, or is it a bear flag and we head down? We covered that too. With Bitcoin, we looked at the RSI, the MACD. We said there are indicators. It could move up. And we said there's also a chance it could move down. Same for the US indices and for Bitcoin. And then, of course, for the altcoins. and the scenarios are clear. Bullish or bearish. This is, like it says here, one of those moments where everyone has to think it through and choose their own position and ask, damn, does this look more bullish to me and I stay in, or more bearish and I get out and maybe buy back in later? Or do I not care and just hodl through based on what we laid out today? That call is on each person at the end of the day. That's the first level of decision making, and all I can do is share what I'm personally going to do, or where I'm personally at on this. I'm still bullish. I still expect the US indexes to make their way to new all-time highs. And like you can see here, these are really strong moves up. That could keep pushing higher. I'm expecting Bitcoin might take a small move down and then go into a relief rally. And I'm expecting the altcoins. I'm 98% in altcoins. So I'm expecting they'll also perform and move higher. That's just what I personally expect. And that's why I haven't spent a single thought on selling anything right now. There are others who might come to the conclusion, oh man, there's a rollover happening here. The retracements aren't playing out. The
bear flag, I'm heading down. It's going to the 50s. I'm reading on X, there are people talking about 40,000, 30,000.
Then maybe it'd be better to get out, because of course the altcoins would drop hard too. That decision, how you position yourself, has to be made by each of you based on the info we're giving here, and not blindly
chasing,
following someone.
Oliver, you just said it, you're still bullish, so you're sticking with your view, that's your plan. Everyone has to make their own plan and position themselves accordingly, and this is not financial advice. Still, thanks a lot for today, and we'll see you again by Tuesday at the latest. And to you watching, I really hope we'll see you again on Tuesday too, maybe with some good news, not just for Bitcoin and altcoins, but hopefully also for the other crisis hotspots out there. Thanks a lot for watching today.